Equity Mates.
I will say this about investing. Everything you do learn is cumulative. What I learned at 20 is useful.
Equity.
Welcome to another episode of Equity Mates, a podcast that follows our journey of investing. Whether you're an absolute beginner or approaching Warren Buffett status, our aim is to help break down your barriers from beginning to dividend. My name is Bryce, and as always, I'm joined by my equity buddy, Ren. How's it going?
I'm very good, Bryce. Very excited for this episode. We've had our guest on previously. I think it's one of our highest performing episodes of all time. He has some views and he's not afraid to share them, and we love that here at Equity Mates. We don't want people sitting on the fence, and I don't expect a lot of fence sitting in this interview.
No, you're right. It is our most downloaded episode of all time. It is our pleasure to welcome Marcus Padley to the show. Marcus, welcome.
Hello, chaps.
For those who haven't come across Marcus before, he is the founder of Marcus Today, which is a daily stock market newsletter, and runs an $80 million fund here in Australia, focusing on the Australian equities. We've previously had Marcus on the podcast, and his episode, No Bullshit Investing, as I said, is one of our most popular. So please do go and listen to that. I think it was just as COVID was setting in that we were chatting to Marcus. So it was an incredible interview. But we've got him back on the show now for part 2 of No Bullshit Investing to help us unpack the current market conditions. So let's get stuck in, Marcus.
Bryce, Ren. Now I'm going to do you a favor straight up. I'm going to double your business for you.
Nice.
With 2 words. You ready?
Yes.
Crypto mates.
It's funny you say that. It's funny you say that.
There might be something in the long pipeline.
No, but I listened to one of your podcasts recently about asset classes. You were looking at various asset classes, and I realised that in your name you just have one asset class, and you've whereas your brand is probably mates rather than equity. So you could be equity mates.
Yeah,
I mean, double it again. Property mates.
Property
you know
mates.
What I mean?
Commodity mates.
Yeah. Well, you've stuck yourself in one asset class, so you need something more generic than it.
Yeah.
There you go.
I like it.
When you launch Marcus Mates with me, we'll go halves.
Nice.
That would work really well.
Yeah. We could say the same back to you. You could do crypto today, property today. You could do anything today.
I was on the ABC the other day just kicking myself that I had not started crypto today because I was over 30. What an idiot. I could have, I've got thousands of subscribers, but I reckon I'd have 100,000 subscribers paying $50. That's 500 grand, $100. It's $1 million. No, we could have done that. And I think we would have known as much about it as anybody else.
Well, look, we are equity mates, and we do want to focus on the equity markets, at least for now. So we'll kick it off with a bit of a game that we like to play, overrated or underrated. We'll throw out some indexes and some key topics and get your thoughts on whether they're overrated or underrated. We'll start with some indexes, and we'll start at home. The ASX 200, overrated or underrated?
It is underrated until it's overrated.
Easy.
No, because if you're trying to say is it overbought, oversold, that sort of thing, then nobody knows when that turning point is, and it goes through phases. It's not one or the other. It's just a straight normal index.
I guess the same answer will apply to the NASDAQ 100 then.
Yes, although I do wish I'd been an American, because then Marcus Today would have probably 30 times the number of subscribers, and the stocks are certainly have more growth opportunities and more interesting over there than over here.
The stocks are certainly sexier over there. No offense to Australian companies, but as Australian investors, it's now never been easier to invest overseas, which is great for us.
Yeah, and it gets easier every day. I remember when I first started stockbroking in 1982, we used to have a partner who would ring the US and then come into the meeting and tell us what the guy in the US had said. And he'd say something like, the Dow Jones was up 4 points. That was as much value as you got. So
yeah, right.
It amazes me we haven't been able to do it sooner. Anyway, it's getting easier.
Yeah. So speaking of, I guess, new asset classes, crypto mates, all of that. One thing that we've seen in 2021 is NFTs. Overrated or underrated non-fungible tokens?
I think it's getting a more pointy end of something that's really interesting, which is blockchain. And if you gather what a currency is, it used to, so a British pound, you could take a note of paper to the Bank of England, they give you a little piece of gold. So it's a promise. That's all a note is. That's all a currency is. What currency does something have if you give it to someone else? So a non-fungible token, if everybody wants to believe that these have integrity, it will have integrity. It's a little bit like a piece of paper I've got from one of my daughters, which says, given to me on my birthday, it says free hugs for life on a little piece of paper. Now that has currency for me because I know she'll deliver on that. It doesn't have currency for a boyfriend because he's sort of nice one day and not the next. But for me, I know Dad will get hugs. So it's all a question of whether people believe the other side of the deal. Clearly, some people are in it. However, I do think this whole assets that don't earn anything, be that gold, Bitcoin, cryptocurrency, non-fungible tokens, whatever you want, are a racing now because of the amount of money around, not because they really have any excitement or integrity. If you sell a baseball card for what is it, 6.8 million or something, you just need someone more deluded on the other side of the deal, don't you? And there are a lot of deluded people because they've got money.
So, Marcus, overrated or underrated full-service brokers?
Underrated, highly underrated, especially for retirees who really don't want to do their own admin. The full-service brokers obviously got undercut by online broking because of the cost. People could deal on their own. But once you get to know a full-service broker, they will do things for you that you couldn't possibly imagine. Admin, ideas, access to IPOs, and they will get under your skin and into your head the same way, like no one else could financially for you. I think they're highly underrated, but most people wouldn't want to pay for them. That's fine, because these days brokers don't want clients. They've got enough clients. The last thing they want is lots of little clients. They just want a few big clients that probably end up friends for life, and they provide them a fabulous service.
Yeah, I think we have definitely taken a strong position here at Equity Mates that full service brokers are overrated for the majority of retail investors. And I think, for us, we're thinking about people with $5,000 to invest, $10,000 to invest early in their investing journey. I guess for people with not a lot of capital, would you still think full service brokers are underrated?
You won't get a full service broker that talks to you. Because you haven't got enough money. It's just pointless. If you take broking for a small order, you as a broker, you spend 20 minutes of your time, because it takes just as long to persuade rich people as poor people. You'll spend 20 minutes of your time persuading someone to do an order that pays you $100 commission, of which you only get $45. Then you get taxed at 30%. So for about $30, you're getting 7 years of liability. It's just pointless. So brokers are a hidden gem that only some people understand and make use of properly.
So then to close it out, overrated or underrated CFDs?
CFDs, highly overrated. You have to be really careful what you say about them. The companies that issue them are very wealthy and very legalistic. I think they are, as I say, I have to be careful. I've had letters. You really need to understand what you're doing, but they present as being providing a service when some of them are actually like a bookie. They're taking the other side of your bet and working against you. And the reason everything moved from, remember, we used to do CFDs over BHP 15 years ago. Nobody bothers with that anymore, but they bother with Forex. And why do they bother with Forex? Because Forex ticks 24 hours a day, every second. BHP ticks once a minute for how many hours a day? 6 hours a day, or however long the market's open. It's well understood that you will, a lot of CFD accounts are like a TAB account, put 10 grand in till you've burnt it. You burn it a lot quicker on Forex than you burn it on BHP. So now Forex is the focus. So all this dealing in Forex is not clever. It is just a better way for providers of the platforms where they take the other side, not all of them do, to wipe your account off you. There you go.
Yeah, so I think, to your point around you got to be careful about what you say about CFDs, I think we can say this because CMC Markets publish this on their website. 73% of retail investors lose money when trading CFDs.
Right, well, good on CMC, because people need to know that it's almost not a professional. Professional's the wrong word. It's a pathetic word. It's a quite sophisticated little mechanism, and you need to understand the leverage, because you can. And people have been caught. I've got examples which I'm not allowed to publish of people who've been caught thinking CFDs were like a broking account where they're putting money into a super fund, and they weren't. They were just putting it into someone else's bank account and then being wiped away.
So, Marcus, we will now jump into the meat of the interview. If you haven't, and this is for our listeners, if you haven't listened or come across Marcus before, head across to the episode we did with him at the early stages of 2020, just to get a bit of a view on Marcus's background and investing philosophy, because we're going to just continue ripping in. There's too many important pieces of information that we want to discuss. So let's talk about COVID and what has happened since, Marcus, because the last time we did chat with you, it was when COVID was really at its depths. So you're able to take us into the room in February and March of 2020. What was your investment committee meeting like at the time, and sort of what were some of the decisions that you were making?
Well, we were fearful of a correction, but there are things we've learned, but we had cashed out in what we now February, and the pandemic had been, not pandemic, but COVID had been around and everyone was ignoring it. And we had cashed out, I think in December the year before, 100%. At the time we had $30 million in our fund, and we'd cashed the whole thing out. And the move, although the market kept going up, the move was extremely popular with our investors, because there are various reasons at the time, mostly things like trade talks. We just thought that the world could potentially blow up with one tweet from Trump, and the market had got quite pricey. And we were waiting for something to go wrong, and the trade talks went wrong, so we'd cashed out. As it was, the trade talks turned into a love fest. Can you believe it? A week later, he tweets love fest. For God's sake, what is it? Is it a disaster? Is it a love fest? And the market kept going up, so we got fully invested again. So we were prepared to cash out, and there were very few funds that do that, and we see that as part of our value add that other funds can't do. So we were looking for that setup to go wrong again. And in February, when you see the markets drop very sharply, and there were various other little indicators that had gone wrong, volatility had gone, the currency had a major pivot point, there were some significant changes. And from the levels that we'd got to, we decided to cash out again. And as it was, and let me just tell you, there's a little bit of luck involved in this game. And it's not all scientific, and you have to place your bets and take what comes. But what I think we've learned, and people don't realize, except our investors realize, is cashing out is not a risky thing to do, because all you're doing is missing out on the possibility of making money. And it's 100% safe. You can sleep at night, and you go in one moment, you go from wishing the market went up and being really fearful about it falling over to hoping it falls over. And so we were it wasn't a big decision to cash out, because the fear of not making money is far more palatable than the fear of losing money. And we knew that we would put people into a completely safe spot. And so the decision wasn't big, but it did take a team to do it. You can't do that sort of thing on your own. And I remember Henry saying, let's do it. It was sort of we aren't going to do this until we got a consensus, and so we cashed out. And this, we're not geniuses, guys. But if I have something written on my gravestone, it'll be timed the pandemic perfectly. But it might also have written on it completely screwed up the bull market in 2022. But we cashed out because this is a big thing for fund managers because they're so paranoid about tiny weeny little underperformances. But for us, it didn't feel like a big thing. It felt like let's just occasionally you do it yourself, just get out. And so we just got out. And then to double our brilliance, on March the 24th, we saw all those indicators turn around the other way. We knew there would be a big bottom. The market had moved. The ASX 200 had moved in an 18% range in a week. And we realized that this is the volatile, this is the bottoming moment. And again, I remember Henry saying, let's just do it. And we got back in. So it really wasn't that big a deal at the time, but we've learned an enormous amount about how to add value as a fund manager. And one of them is through manipulation of the cash versus equities. We only have two assets, cash versus equities. So you can't really talk about asset allocation, but it's effectively asset allocation and how we fight for 0.5% a day or not. In a bull market, it's very, very hard to chase the market, to beat the market. It's an index is 100% invested. That's super aggressive for a fund manager, but you've got to match this 100% invested index, and it's very hard. But on the way down, if you've got the ability to go cash, it's very easy to gain outperformance. So this is now part of our offering, is this idea that we are very sensitive and experienced at getting you out in the bad times and saving you years. People fight for 0.5% outperformance in a year. We got 20% outperformance in 23 days. So in a bull market, we're chasing the market. We're doing the best we can without taking too much risk. You can't beat an index that's compounding without going hard on risky stuff. So our game now is stick with the index, and when the precipitous moment comes, add value. And that's what we're trying to do.
So, Marcus, you nailed the timing in 2020. We're now in the middle of a pretty incredible 1-year run from the depths of the COVID lows. We want to draw on your wisdom and see if you can nail the timing a second time. How long do you think this bull run is going to continue?
Okay, and that is where everybody goes wrong. You're asking me to predict the timing of the market.
You're a genius, Marcus.
Oh no, I am. I'm a genius after the fact. So our game is you can't predict. You have to react. Okay, nobody can time when the market's going to fall over, when the herd has a change of mood. Everyone can spot when the market's exuberant, when it's overbought. The mere fact that we're talking about non-fungible tokens and baseball cards suggests to me, we're in a position where we could easily have a correction of some sort. But even from here, I don't think it would be a big one. We're still, 3% below where we were at the top of the pandemic type of thing. If you were to take the pandemic out, we're on trend. We're not hugely overbought. And you can look back and say, you can actually say, if I do the chart here, we're 59.59% up from the very bottom. If you'd left it a week later, we're actually only up 38% from the bottom. And if you left it a week later, There you go. We're up 31%. We're not. It's not an extraordinary year. It's a recovery from a pandemic. So if you were to take the pandemic out of it, I don't think we're at extraordinary levels. But we are always aware of not the fear. You don't want to fear a correction. Just wait for it to happen. We are looking for the opportunity of a correction. You get a 30 to 50% correction once every 10 years. You get a tradable 10 to 15%, 20% correction once every 3 years. We might find the excuse for a correction. I had someone send me clips from a couple of economists' articles today saying, what do you think about this scary stuff? I can tell you, until you know the moment the market falls over, you'll have 50 really good reasons to sell because everyone will make them up in hindsight. But ahead of the time, it's pointless to worry about it. Keep working on your golf handicaps. At some point, the stock market will knock Collingwood off the front of the Collingwood Times for a good reason, because it's going down. And that'll be a day to, over your coffee on a Saturday, start thinking about maybe we should subscribe to Marcus today and see whether it's time to sell.
How is your golf handicap going?
I've got a bit of a joke with a mate of mine I play with, and it is you can only wear a white belt if you're in single figures. So
we actually say the same thing.
Do we?
Yeah.
I'm on the cusp of white belt. Luckily, it's a reversible one.
White belt, white pants. Yeah, if you're rocking that and you're above 10, then you need to have a hard look at yourself.
No, guys, if you're going out in white pants, there's something missing, like a mirror, maybe.
So, has this year and a half challenged any commonly accepted market wisdom? And is there anything that the markets accepts at the moment that you think is just simply not true?
Yes, I would say that what we have really learned, you only get moments in your life where things happen, and it can be not necessarily structured or contrived or worked towards, but it happens and you learn. And what we have learned over the last year is, despite our brilliance, it's very hard with 100. We're 100 million, not 80, by the way. It's very hard with $100 million as a fund manager. It's tiny in industry standards, but it's very hard as a fund manager to outperform a compounding index, which wouldn't really matter except for the fact that you can actually have a compounding index in ETFs these days. And we have worked out that for the level of risk, every fund manager takes less risk than the market. As I say, the index is 100% cash, not cash, 100% invested at all times. Very hard to beat in a bull market. And we have learned that you can, or we could, buy an ETF, get rid of all the stress of stock picking, and just time our precipitous moments correctly, and we should be able to add a lot of value as a fund manager. So I think what we've learned is that it's the corrections are the most fabulous bits of the market. Might sound a stupid thing to say. Not to be feared. They're to be exploited. And we've learned to watch the herd, not join the herd. And any Marcus Today member will have heard that 100 times. We are watching the herd, and the herd can get out of control, irrationally exuberant, and it often does. Prior to 87, the market was up over 100% in a year. We might do that again, but you don't duck out from reading some economist's article. You don't listen to the finger waggers. You enjoy the irrational exuberance until it ends. So we're just waiting for it to end. But chickens don't make money. You can't be a chicken. The game is here to be played. If you are wanting to be a chicken, you should be doing something else. The equity market's a game. Don't take yourself too seriously. It's also fun. And if you can just see it as a bit of a game, take your wins as cheeky wins. Well done me. I was a bit lucky there because there's not a science behind herd mentality.
Yeah, yeah. Now, Marcus, talking about having a bit of fun, we do have another quick game that we want to play with you to get your no bullshit take on some other asset classes. But before we do need to take a quick break just to hear from our sponsors. So, Marcus, as I mentioned there, we have another game here that we want to play with you. We recently did an episode on the podcast where we spoke about how everything was either at all-time highs or close to all-time highs, from Bitcoin to baseball cards, property to Picassos. Everything seems to be running at the moment. We want to get your take on some of these asset classes. So what we want to do is we want to throw out an asset class and get your quick-fire take on them. Are you up for playing?
Absolutely. Is this on whether they're expensive or cheap, or whether they're got integrity or not?
Whether they've got integrity as an investable asset, I think. So we'll start with the hottest asset of 2021, Bitcoin and cryptocurrencies. What's your take?
It is overrated because I'm over 30, but just understand that some things become not self-fulfilling is the wrong word. The institutions are getting involved. I don't know whether you saw, but there's some of the Melbourne establishment are getting started in $1 billion crypto fund. It's like a stock going from the ASX 200 into the ASX 200 from outside. The institutions have to get interested. If they start $1 billion fund, they'll do $1 billion worth of activity in cryptocurrencies. It's at a moment where it's getting legitimacy, but it's just as I say. The herd will change its mood at some point. Watch out for that. But I just think it's interesting that this crowd is so exploitable, so not reading the small print, so desperate to get access to a fast-moving price that even the big end of town is trying to exploit them now, and it will help Bitcoin.
So what about baseball cards, Marcus? Where do you stand on that? All you've got to do is find someone more deluded than you. Yeah.
No, but it's like anything that moves. It's also like your podcast the other day about what asset classes why they're all at highs. It's the weight of money around at the moment.
Yeah.
Everything's born from confidence. Everyone's very confident. The people who are paying $6 million for a baseball card will look like absolute idiots sometime in the future, and then absolute heroes if you leave it long enough. So, but I'm not going to work all day and put my money on the hope of finding someone more deluded than me.
So, Marcus, one asset that hit an all-time high in 2020 and then has softened a little bit, some argue because of the influence of Bitcoin and cryptocurrency, has been gold. How do you think about gold as an investable asset at the moment?
It's another representation of herd thinking. Gold, all the gold in the world is 20.4 meters by 20.4 meters by 20.4 meters. It's a cube. All the gold ever dug up. It grows by 2% per annum, shrinks by 2% through usage per annum. So it just sits there, this inert lump of metal, and everyone runs around and says, oh, no, you're worth this now. No, now you're worth this. Oh, now you're worth that. Meanwhile, the piece of inert metal is going, why is everybody so excited about us? Because we're not doing anything, and they aren't. And I think for an investment, it needs to be earning something. The CEO of Afterpay is doing things. The CEO of gold is doing zero. So it's just a question of herd delusion, in which case, not herd delusion, herd thinking, in which case gold is a buy when it does well when the world goes to hell. So wait for the world to go to hell. And no doubt when the vaccine news came along, gold peaked. We sold all our gold stocks the moment the vaccine news came along. Because the herd was now going to go, now we've got to play somewhere more exciting. So gold's fine. I'd never bother investing in it. I don't have faith in the herd doing what I want until I want to sell it.
And then what about bonds, Marcus?
Bonds are the most boring thing you could possibly invest in.
I don't know.
in
Have
the
you met
world.
Bryce? He's pretty boring.
Why would you? It's just just look at a 30, 40-year chart of the bond yield, 10-year bond yield, and you'll realize we've got to a point now where, admittedly, bond prices are going up. We're getting to a point now where, as an investment, it's returning so little that you really have to look elsewhere, and that's probably why the equity market's doing so well.
And then final one in this game of non-equities asset classes, Australian residential property is having a moment. I mean, residential property around the world is having a moment. How are you thinking about Australian residential property?
It's the source of all financial mental comfort for almost everybody. People wouldn't be buying baseball cards if property market was going badly. It's obviously having a moment now. It's not something to be fearful of. And if at some point the property market was to fall over, you'll find there are other issues around you need to be worrying about. If the property market fell over, you're probably out of a job. The economy's stuffed. Interest rates are negative, so no need to worry about your mortgage. Everything moves together, and I think it's good a core investment as any Australian could have.
So, Marcus, if we move back to equities. Where are you looking or seeing opportunities at the moment? I think the last time we spoke, or I was listening to you not too long ago, and you were talking about the recovery stocks. That was back when I think we were very close to having vaccine rollout here in Australia and the US. Where are you currently focusing attention now, particularly with all this money around and I guess no reason for it to stop? What's your view?
The biggest opportunity we are almost hoping for is a tradable correction. That's where our outperformance is going to come from. Otherwise, I think the strong theme at the moment is COVID is over. People don't believe it's over. We're obviously getting vaccinated at the moment, and the ABC is still showing pictures of hotels in quarantine and how people are escaping India and trying to come to Australia. It's old news. COVID is over. Unless, of course, it blows up again. But COVID's over, start moving on those themes. So I think the recovery theme is still good, and you'll find travel stocks, and not just travel stocks, but recovery sectors, which is things like energy stocks, are probably quite solid investments now. Although I have to qualify that by saying, have you seen what's happened to Kogan, Redbubble, Temple and Webster recently? They've all fallen over because there's a peak earnings situation happening in the COVID beneficiaries. So you probably need to be moving on from them and looking to the recovery sectors. I think Qantas will be having a board meeting in 5 years' time, and they'll go, the best thing ever happened to us was that pandemic. Absolutely destroyed our competition and bumped prices up for us and all that sort of stuff. So recovery stocks probably, and as I say, always hoping for a correction so we can do something about it and create some outperformance.
So, Marcus, one question that we've really enjoyed asking experts lately is for a couple of specific stocks on their watch list. It feels like everyone in the Equity Mates community loves to hear what the experts are researching. So are you able to share a couple of stocks that not necessarily ones that you're buying or holding at the moment, but just some that you're watching and researching, maybe in that travel theme or in that recovery theme, or just more generally what you're looking at the moment?
I've got a couple. Disclaimer, I hold them. One of them is BetMaker. BET, we've put that in our fund in a tiny size. We can't buy too many of them. We'll blow it up. But if there is a boom going on in online betting, some industries are just boom. And this is happening in the US. Legislation changes which allows states to dictate whether they're going to allow online betting. And certain states are taking it up. You've probably seen Shaquille O'Neal and Mark Wahlberg on our TVs recently. There's a boom going on, and bet makers can white label betting platforms for people. And that's going very well. Another one is a stock which is run by guys from Nanosonics, which was very successful, called EM Vision. They've got what Henry calls it, the helmet or something. But when you have a stroke, there are two very different types of stroke, and the treatments are diametrically opposed. And by the time you get to hospital, it's often too late, by which time you're paralyzed down one side of your body permanently. So this is literally a brain scanner that goes in ambulances and determines very quickly which one you've got, and therefore you can treat it much more quickly. So that it could be one day global. They don't make any money at the moment, of course. They're getting grants of all sorts to develop it. It is well developed, good management. So EMV is that code. Otherwise, this might sound a silly thing, but if you look at the sales numbers from Afterpay and Zip Money over the last quarter, this sector is still clearly in its, I wouldn't say it's in its infancy, but the replacement of credit cards with buy now, pay later continues apace. And at some point, these companies will allow themselves to become profitable. So we're still taking the bet on buy now, pay later.
I think a lot of people in our audience would love to hear that.
Yeah. Well, it's all right listening to someone like me, and someone will send me an email going, I listened to your Equity Mates podcast last year, and, the buy now, pay later fell over, and you're an idiot. It is a very herdy thing. We will be out and in 100 times before you send us that email. So we could change that view today.
Yeah. So before we get into some of our final questions, we will just take a quick break to hear from our sponsors. So Marcus, we generally finish with the same three questions, but for this interview, we are changing them up somewhat because before the interview, you sent us a few dot points that you wanted to discuss, and we couldn't help but put them in.
Well, also, we've asked you the standard final three questions in our last interview.
True.
So you can, if people want to hear your responses to those, they can go and listen to the other interview. But yeah, as Bryce said, you had some questions that we wanted to fit in there. First one is there a holy grail of investing?
Yes.
Wow.
Are you able to share what it is?
It is understand there's a lot of luck. Don't take yourself too seriously. Try and have fun with it. There you go.
I like it.
Because there really is no holy grail. And I'm in a space where people in my space are trying to pretend they've got it. Here's our 10 DVDs. No one's got it. No one has got it because it changes. What you need to be doing every day changes. Not necessarily the same system will work. The people who think they've nailed it are people like value investors who can use Warren Buffett to sell their products. By the way, out of all the keywords in the world, the top 10 are Buffett, Warren, Buffett, 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 Warren, 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 Buffett. So he's used as marketing material. A lot of value investors, therefore, think they've got the holy grail. They haven't. All I would say to you is don't take this game too seriously. There is a lot of bullshit, in your own words. There's a lot of bullshit. And if you can just stay above it all, try and have some fun with it, and don't take it all too seriously. So don't invest too much. Don't put too much on the line. You'll have a nice time investing.
That point about things constantly changing, I think, is so important and is often lost on people. Things that worked at one point won't necessarily work in the future. We looked at David Einhorn recently, who for about a decade was one of the better hedge fund managers in the world. I think he averaged 26% a year for a decade, and then since then he has suffered about a decade and a half of serious underperformance, had most of the money pulled out of his fund. And it just shows that, you can be on top and your system can work for a while, but that doesn't mean it's going to keep working.
Yeah, well, there you go. The system will work until it doesn't work, and then think about it. If the guy's still doing the same thing 2 decades later that isn't working, then he's not that smart a bloke anyway. But that's just it. But the game is timing, and the idea that you can't time the market is just ridiculous cop-out by every financial advisor and that uses that line, because it basically means I want to sell you a product and I don't want you to ring me again because we can't time the market. We're long-term. So I've sold you a long-term fund. I'll keep taking the fees till you sell it, but don't sell it because there's no point timing the market. You've got to time the market. Time frames, you choose your time frame. Not everyone's time frame is 20, 30 years. My time frame is make as much money as I can in whatever time frame allows me to do it. And then if that's till the next correction, it could be tomorrow. Then I'll do something different.
Yeah.
Anyway.
Yeah. Now, Marcus, this is a question we've been trialing with all of our guests in 2021. In 60 seconds or less, what's the best company you've ever come across?
This is not a lie, but I fluked this. It's probably Marcus today. I started writing emails to clients with stock tips, and before I know where I am, I'm a fund manager and have a subscription newsletter. Both of those businesses are scalable, and that's really astonishes me that I have ended up with a scalable business. At some point, there'll be new brand names in finance. It could be Equity Mates, could be Marcus today, but we're in a position. You're in a position as well where you're scalable. I'm scalable, and as long as we protect the integrity of our brands, we could be We could be tomorrow's AMP, which don't want to do that.
I don't know about that association.
If you imagine the traction that AMP had in this country. And we could. Someone's going to take their place, and that could be us if we manage ourselves properly.
There you go. We've had a number of answers to that question. We've had, realestate.com, we've had Macquarie Bank, we've had Apple. No one has ever said Equity Mates, so I appreciate the plug, and no one has also ever said their own business. So you're breaking a lot of new ground here. Which I like, Marcus.
Well, I'll give you one more now you've mentioned them. But if you would ask me the best stock in the whole market, how many employees has Macquarie got? 14,000 of Australia's smartest people with one game in mind make money. Yeah. I think that's pretty. I think that's a pretty good investment.
Yeah.
They've got results this week, haven't they, on Friday? And if Goldman Sachs' results are anything to go by, investment banks have absolutely kicked it out of the park in the last 12 months.
And then, Marcus, last question. What is one piece of wisdom that you would pass on to your Marcus Today members on your deathbed? And
this is fairly easy. After 60 years, it doesn't get any easier.
Do you want to elaborate on that?
No, we actually asked this question in the newsletter, and that was one of the better answers. The other answer I liked was don't get divorced. That was unless you want a 50% drawdown. No, I used to. This is probably a reasonable way to finish, but I sat on a board called Foundation 50, which was to raise the awareness of colonoscopies for over 50-year-old men. And I sat at lunch with a psychologist who did nothing but consult with terminal men. And this guy said that the one thing that everybody said was that they wish they'd spent more time with family. And this guy now worked, even though he was only 35 or so, he worked only 3 days a week because he saw the value in time doing what he wanted with who he wanted to do it rather than in earning money. So I think that would be possibly on my death, it'd certainly be on his deathbed, is time with family is more important than making money.
Love that. Great way to finish the interview, Marcus. And as always, it's been an absolute pleasure chatting with you and getting your thoughts on current market conditions and where you're looking for opportunities. If anyone in our audience would like to know more about what you're doing at Marcus Today, or perhaps subscribe and sign up to your services, what would be the best way to do that?
I'll just Google Marcus Today, marcustoday.com.au. Get a free trial to our newsletter. You'll see what we do. We have a large focus on education as well. I think most of our members sort of feel that they know what they're doing now.
That's good.
Listening to us for a while.
Nice. Well, we look forward to keeping in touch. We're always chatting with you guys, and Henry's always coming on AusBiz to talk about what he's doing in the small cap space over at Marcus Today. So plenty going on, and we really sort of respect your opinions on the market. So as always, it's a pleasure, and we do thank you for taking the time today, Marcus. Appreciate it.
Well, thanks, Bryce. Thanks, Ren. And I look forward to Marcus Mates.
Marcus Mates. Yeah, let's take that offline. Marcus Mates, Crypto Mates. Love it. All right,
Thanks, Marcus.
We'll chat later.
Equity Mates Investing Podcast is a product of Equity Mates Media. All information in this podcast is for education and entertainment purposes only. It is not intended as a substitute for professional finance, legal, or tax advice. The hosts of Equity Mates Investing Podcast are not financial professionals and are not aware of your personal financial circumstances. Before making any financial decisions, you should read the product disclosure statement and, if necessary, consult a licensed financial professional. Do not take financial advice from a podcast. For more information, head to the disclaimer page on the Equity Mates website, where you can find ASIC resources and find a registered financial professional near you. In the spirit of reconciliation, Equity Mates Media and the hosts of Equity Mates Investing Podcast acknowledge the traditional custodians of country throughout Australia and their connections to land, sea, and community. We pay our respects to their elders past and present and extend that respect to all Aboriginal and Torres Strait Islander people today.